All right, let's get right into it. If you're in crypto, you've probably heard the word diversification a million times. But what if holding 10, 20, even 30 different tokens isn't really diversification at all? Today, we're going to talk about a way to build a genuinely more resilient portfolio right on chain by adding a totally different kind of asset, all without ever leaving your Ton wallet.
So here's the game plan. First, we're going to pull back the curtain on what I call the diversification illusion. Then we'll introduce a really cool tool called XStocks. After that, we'll look at a super simple 3-bucket strategy to put it all together. We'll even walk through how you can build your own mix. And of course, we'll cover why doing this in DeFi is such a game changer, before we wrap up with a clear-eyed look at the risks.
Okay, first things first, let's tackle this diversification illusion. You know, this is a trap that a lot of us fall into even if we've been in the space for a while. It's this belief that just because you own a bunch of different coins, you're automatically safe.
So I want you to take a second and really think about this. Look at your own holdings. Are they actually diversified, or are you just holding a bunch of different assets that all kind of do the same thing at the same time? Because here's the bottom line, and it's a tough one. If you own 10 different tokens, but they all skyrocket on the same good news, and then all crash and burn together on the same bad news, well, that's not diversification. You're just concentrated in one big asset class, crypto. It's like having a single point of failure that's just wearing a bunch of different hats. And this really gets to the core of it, right? Most crypto assets are what we call highly correlated. Basically, they're all boats in the same ocean, rising and falling with the same tide. They're all dancing to the same music of crypto market sentiment. Real diversification isn't about how many tickers you own. It's about owning things that behave differently from each other. If everything is just a reflection of crypto sentiment, then one bad day can take your entire portfolio down.
So, if that's the problem, what's the solution? How do we break this cycle but still stay on-chain, self-custodied, and true to the DeFi ethos? Well, that brings us to a fantastic new tool for your toolkit, XStocks on TON. This is how we can add a completely different engine to our portfolio.
So what in the world are XStocks? It's actually pretty simple. They are tokenized versions of real-world stocks and ETFs. So think Apple, think Tesla, think the S&P 500. And here's the key. They are fully backed, one-for-one, by the actual real securities. And the best part? They live on the Ton blockchain as regular tokens, Chettons as they're called on Ton, right inside your own wallet that you control.
And just look at these examples. You know all of these names, right? We're talking about tokenized Apple, Amazon, Google, even those big broad market ETFs like the S&P 500. It's pretty incredible that you can just swap from, say, a meme token directly into tokenized Tesla on Stone.fi.
Now, this is the whole reason we're talking about this. This is the crucial point. The value of these XStocks is tied to the performance of those real-world companies and the traditional economy. It's not just driven by the latest crypto narrative or tweet, and that's what makes them such a powerful tool for genuine diversification.
Okay, so we've got this awesome new tool. Now what? How do we actually think about using it? Well, there's a really simple but really powerful framework you can use called the 3-bucket strategy. It's basically a DeFi native version of a classic portfolio strategy.
Imagine 3 buckets for your on-chain assets. Bucket 1, that's your crypto native stuff, your high-risk, high-reward tokens. This is your main engine for potential moonshots. Then you have bucket 3. This is your stability, your Ton, your stablecoins. This is your safety net and the dry powder you use to buy the dip. And right there in the middle, bucket 2, that's where XStocks live. They add exposure to the real economy and act like a shock absorber, helping to smooth out the crazy volatility of crypto.
Okay, that's the big idea. But theory is one thing. Let's roll up our sleeves and talk about how this actually looks in the real world. Let's move from theory to action. Now, huge disclaimer here, okay? This is absolutely not financial advice. These are just examples to get your wheels turning. But you can see how different people might use these buckets. You could be a crypto maximalist who just wants to use XStocks to make the ride a little less bumpy. Or maybe you're building a bridge portfolio with a nice even split. You could even be a more conservative DeFi user who makes XStocks the core of their holdings, all while staying fully on-chain.
And hey, getting started with this is actually pretty straightforward. Step 1, just be honest with yourself. Look at your portfolio. If a 50% crypto crash would basically wipe you out, it might be time to think about this. Step 2, decide on a target. What percentage do you want in XStocks? Then just start simple, maybe with a broad ETF. And finally, the important part, write down a simple rule for yourself about when you'll rebalance to stick to your plan.
Now, you might be thinking,
Hey, I can just buy stocks with my regular broker. And you can. But doing it in DeFi, well, it's a completely different universe. Let's talk about DeFi's massive advantage here.
I mean, look at this comparison. It's night and day. With a traditional broker, you've got all the paperwork, the gatekeepers, and they hold your assets, not you. Plus, you're stuck with their 9 to 5 market hours. With XStocks on ston.fi, no gatekeepers, full self-custody. You own your keys, you own your assets. The market is always on, 24/7. And everything, your crypto, your stocks, your stables, it all lives together in one single wallet.
And this quote just says it all, doesn't it? Think about that. You see some crazy news on a Sunday night and want to de-risk out of a volatile token and into something like an S&P 500 ETF? You can actually do it, instantly. That kind of freedom is a superpower. You're no longer on Wall Street's schedule.
Okay, but let's be real for a second. Nothing is a magic bullet. And to give you the whole picture, it's super important to talk about the risks. This isn't a free lunch. There are things you absolutely still need to respect.
First off, just because it's a token doesn't mean it can't go down. If the stock market has a bad day, your X stock will too. You're also trusting that the issuer is doing their job and that the real assets are actually there backing your tokens. And be careful of a false sense of security. If you just sell your altcoins to buy a bunch of high-risk tech stock, X stocks, you're still super concentrated. And finally, that 24/7 market can be a double-edged sword if it tempts you into constantly messing with your portfolio instead of sticking to your plan.
I love this line because it just hits the nail on the head. Diversification with XStocks is a tool, not a magic spell. It's a really powerful instrument in your toolbox, but you still have to be smart and disciplined about how you use it.
So, when you boil it all down, what's the big takeaway here? The goal is to finally achieve something that has been missing in DeFi for a long time. A way to be truly diversified without ever giving up control of your assets, without ever having to leave the on-chain world. It's about building a portfolio where your entire net worth isn't riding on the next crypto cycle alone.
And that really leaves us with one last question to chew on. Take a hard look at your portfolio today. Is it built to last? Or is it really just a bet on the next crypto bull run? Something to think about. Thanks so much for tuning in.